welcome back to Cash Flow Confidence. I'm Shelby Ashley, and I help business owners feel more confident about their cash flow. So continuing on this series on going line by line, starting with revenue and ending with cash flow of where all of your cash goes. Last week we talked about cost of goods sold and kind of how that equates to your gross margin. This week, I'm going to talk about everything that is beneath your gross margin, which is all of your overhead. So this is everything between gross margin and your net profit. And so the first line that I see when I'm analyzing somebody's overhead is what they have spent on marketing. And I always measure this as a percentage of revenue instead of just looking at dollar amount, because I want to see for every dollar that was spent on marketing, what did you get in terms of revenue? So if you've ever noticed whenever you're booking a table somewhere or you're ordering something online from a specific store, you may have been asked, how did you hear about us? And sometimes it's annoying when this thing pops up and you're like, who cares? Just let me buy what I want to buy. But the reason that organizations do this is because they are spending money on each of these marketing channels, whether it's Facebook ads, Google ads, billboards, whatever, even, yellow pages if people still do that. But they're asking because they need to know how many customers am I getting through each of these channels that I'm spending money on. And you need to be tracking that as well if you spend money on marketing. And so if I tell you, hey, this business spent $20,000 on marketing this year, does that sound like a lot to you or not a lot to you? So if I say, hey, they spent $20,000 on marketing and they only did $50,000 in revenue, you'd be like, dang, that's not a lot at all. That's kind of bad. But if I said, they did $20,000 in marketing and they made $1 million this year, you'd be like, wow, they got a lot of money out of all those marketing dollars, right? So that's why it's so important to look at it as a percentage of revenue. And if you're using several different means of marketing, like if you have billboards or you're also doing, some online ads, you need to be capturing where your leads are coming from so that you know how well your marketing dollars are being spent and so that you know, hey, I'm not getting anything returned from these online ads, so I'm going to cut them loose, and I'm just going to pour all my money into this thing that I know is bringing me leads. So that's marketing. The next thing I look at below marketing is your payroll expense. Now, the payroll expense in this section, the overhead section, needs to only capture all of your admin salaries. It does not need to capture your direct labor. We talked about direct labor last week when I was talking about cost of goods sold. You need to capture all of your direct labor in your cost of goods sold. And so this payroll expense line that I see beneath marketing, it captures all of your administrative payroll. It's all that payroll that if you didn't make any other sales, you would still have to pay these people. So any office staff you have, bookkeepers, things like that, things that, it doesn't matter whether you're making money or not, you've got to pay these people what their pay, what their salary, whether that's hourly or if they're salaried, you still have to pay them. I do look at this as both a percentage of revenue and as the dollar amount. I don't look at it as a percentage of revenue with the same intention that I do marketing. Your marketing dollars should be spent directly towards increasing revenue. Your payroll is not like that. I only look at it as a percentage of revenue just to kind of track trends and see if it has increased or decreased without any underlying reasons. Like if your revenue has doubled or tripled in recent years and your payroll as a percentage of revenue has stayed the same, that might tell me, hey, is your team, feeling kind of burnt out or anything like that? Because I see revenue increasing quite a bit and your payroll has kind of stayed the same. Whereas if I see, revenue has stay the same or it has maybe even decreased, but your payroll is going up and up and up, I'd be like, hey, why are all these positions needed? Why is payroll going up like this? I look at it a percentage of revenue for that reason, but I mainly want to see what it is dollar amount so that I can kind of track trends and see if, okay, are we giving people raises like we need to, that kind of thing. So that's payroll expense. Something that I see that gets overlooked all the time when business owners are trying to budget whether or not they can afford a new hire is they leave out any benefits that you're paying this person. So like 401k, health benefits, things like that, and all your payroll taxes. I always see people forget those too. So when you're factoring in what you want your admin payroll budget to be, do not forget payroll tax and do not forget any benefits that you're paying out. After payroll, I look at literally every single other cost that you have. I lump this in on my financial model as just overhead. I separate payroll and marketing out, and then I've got just a section for overhead. And this counts as all of your fixed expenses, like your rent, your utilities, any software subscriptions you have, your insurance, travel, dues, things like that. Things that it doesn't matter if you didn't make a single other sale, you're still going to have these costs. It is very easy for waste to get found here because, say you subscribe to something, you forget about it, you don't cancel it, you subscribe to something else. Now you've got 3 things that you're paying for that all do the work of one thing. That's very, very easy to get caught up in here and, kind of lose track of what you're paying for. And so it's very important, at least once a period, to look at what you have spent in each of these categories, see where any prices have gone up that you might could negotiate things back down. Maybe that's rent or insurance. If you haven't reviewed what you're paying in these areas in quite some time, you need to start reviewing that and look at what you did in previous years and set a budget according to that, so that each month when you're comparing these things, you can see like, oh my goodness, something is way out of budget. So it's way beyond what we paid in previous periods. Let's look into that and figure out what it is that's going on. This is also an area as well where anything that you have been deducting on the business side, like you go out to eat or you get gas or whatever it is, and you run it through the business so that you can lower your tax liability, that's going to get trapped here. And the thing is, yeah, you're going to save on taxes and, up to a certain amount, the IRS really ain't going to come knocking and looking for you. But what it's going to do is it's going to make your profitability look a lot worse than it actually is. And so if there's anything that you've booked through the business that is not a legit business expense, it's a personal expense, make sure you're backing that out when you're looking at your profitability, because anything like that you've booked through the business is going to kill your profitability and you're going to look a lot worse off than what you actually are. And then the final section, when it comes to the profit and loss piece that I look at, is other income and expense. So this is where anything that's out of the ordinary is going to be captured, like maybe you won an insurance settlement or you got a really big refund for something, or anything that is not part of the normal course of business is going to be put here in other income. I don't really set budgets for this account. If I see that something has been booked there regularly, I might argue that, okay, this isn't a legit business expense. But if I see that, just random things have been put here, it's kind of hard to make a budget for that because, like I said, this doesn't capture normal course of business items, but it does affect your profitability. But you really need to pay attention to this account because let's say you won like a big legal settlement or something like that, or you had a big gain on something you sold, and your profit and loss statement is saying that you did 20 grand in profit that month, but only 5,000 of it was from normal business expenses and 15,000 was from a big settlement. That's important. You need to know that. Don't just see, this high profit number and think, oh, sweet, I'm doing great. And meanwhile, you've got a huge item sitting in other income that's just, a one-time thing that's going to really skew your thinking. So just to recap, everything that is captured in overhead is your marketing that you want to measure as a percentage of revenue. And again, make sure you are asking your leads how they found out about you or where they came from so that you know where to put your marketing dollars. The second one is your admin payroll. Make sure you are accounting for payroll taxes, benefits, all those extra things that come with having payroll. Don't just count the wage and budget for just the wage. And then the final piece is all of your other fixed costs, like your rent, utilities, insurance, subscriptions, things like that, plus any other one-time other income or expense. All of these things together make up your overhead. So let's say your cost of goods sold is doing really well, you have great gross margins, but your net profit looks terrible. You're going to want to comb through here and see what's happening, because if your gross margin is great, then it's not a cost problem. You're keeping, a lot of what you make off of each sale. But if your net profit is terrible, it's going to be something captured in this overhead section. But that's all I have on overhead. I tried to make this as exciting as you possibly can when talking about overhead expenses. Next week, we're going to get started into the cash flow side of things. So we're moving off of the profit and loss. and onto the balance sheet, which I know everybody hates looking at balance sheets. They're very confusing. They're not meant for business owners to understand. So I'm going to break that down for you, and we're going to start to tie in how your profitability is kind of related to what you're seeing in your bank account and how to marry the two up. All right, see y'all next week.